Morning everyone, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Tuesday the 4th of August. So again, we've seen prices starting to open up lower than where they closed last night. The key influencing factors today are, number one, again we've seen prompt UK gas markets oversupplied with line pack forecast 12 MCM long. Number two, we've seen oil prices dip below the $50 per barrel mark. And finally, number three, we've also seen the pound sterling manage to hold its level against the euro following some pretty neutral PMI data released yesterday. Those are your main headlines today. If you've got any questions, please contact us on the email address provided. Otherwise, continue to watch for a bit more detail. So we're going to look at the UK gas market to start with. As I mentioned, oversupplied by 12 MCM today. That comes as demand is roughly in line with seasonal normal levels, around 150 MCM, and we still have pretty healthy supply levels as well. Looking at the supply side to start with, we can see flows have picked up from Norway through the Langeled pipeline. They're up at around 39 MCM today. We've also got LNG send out picking up a little bit towards 26 MCM, but with 3 cargoes scheduled to arrive in the next 7 days or so, we could well see that level pick up towards maybe 30 MCM over the next few days. On the demand side, the storage levels are injecting at 17 MCM net injections today. That comes after Rough had some essential maintenance work yesterday, so they're back up to normal sort of injection levels today. But we will have seen the move to single train injection pushed back a little bit because of that maintenance. And that will obviously reduce the level of injections they can do and therefore reduce some of the demand on the UK system. Elsewhere, we've also seen IUK exports are fairly flat with yesterday's levels. Looking at the power side to start with, we've got peak margins of around about 14 gigawatts today. That comes thanks to some good healthy wind generation forecasts, which are scheduled to pick up to around 6.7 gigawatts later this afternoon. But current levels of wind generation at just 4 gigawatts is kind of 2 gigs below where it would have been forecast. So we might see those power margins tighten a little bit and a little bit of support come for the prompt power contracts. Looking at the oil prices though, they have been driving down the curve on both power and gas markets in the UK. As I said, Brent benchmark contracts are now below $50 per barrel. That's the first time they've been there since January earlier this year. It's difficult to see how much lower they can go. Obviously we're in an oversupplied market with OPEC at record production levels. We've got Iran's impending volume coming back to the market soon, and we've also got this poor outlook for global growth really, so everything's pointing in a bearish direction. But tomorrow we've got more US inventory data out which might provide some direction. Otherwise any support is going to come from technical levels until we see any kind of changes in the US shale production. They're kind of the swing producers at the moment, and a lot of those rigs will be pretty much on the borderline of profitability, if not already making a loss at current pricing levels. That's it for today. As always, join us again tomorrow. If you've got any questions, please give us a shout.